I'm often asked, what should I invest in? Or what do you think about this investment? Or how do you invest your money? My answer is always the same. I don't give them one. And the reason is because not because I'm mean or dodgy or arrogant. It's because the question itself is coming from a place with no foundation and thinking, some quick response or quick answer for me is going to all of a sudden turn around their fortune. It's important to have a sound approach. And that starts with fundamentals. Now, there are four main principles that I use to help guide decision making when it comes to investments or working in the investment arena. And I'll give them to you. Principle number one, take risk, but also hedge that risk. What I mean by that is owning an appropriate amount of stock and managing that risk with having fixed income or fixed investments to help offset that volatility that comes with owning stocks. Principle number two, diversify. This is more than just owning a bunch of stuff in a portfolio, but it's rather more of a strategic way to position the investments that you have in your portfolio to match the amount of risk that you're willing to take. Principle number three, rebalance. As market forces work, it's easy for an investor's portfolio to naturally drift away from the amount of risk the investor was originally willing to take and the composition that the portfolio had. So rebalancing essentially brings it back to that composition or that given level of risk by selling what has done relatively well and purchasing or buying what has done not so well or maybe just not gained as much in value. Principle number four, easily the hardest of all four, is to behave accordingly. In other words, this is following the other three core principles and keeping emotions in check and staying disciplined to those other three principles over time. Now, Dalbar studies and other third party sources consistently show that there is a significant difference between gross market returns and the average investor returns. And that difference can be attributed to poor or unmanaged investor behavior. Now, these rules are easy to understand, but difficult to follow, which is where a financial professional could help provide value by helping manage behavior over time. For more information, click the button below, like and subscribe.